all and welcome. You're watching ET now. It's Friday afternoon, last 1 hour of the trading session, and definitely the bulls are having a party in the market right now because from the lowest point of the trading session there has been quite a bit of recovery. At least at the Nifty level, we are almost 200 points off the session lows and 700 points off the session lows when it comes to the Bank Nifty. 19,400 being comfortably scaled for now at the Nifty, and we are right now around that 19,450 mark. Interestingly, it continues to be the broader markets that is showing outperformance despite the run-up that we have seen in the frontline index. Look at the mid-cap and the small-cap indices. They are trading much better and faring much better than what the frontline index is doing. And in fact, for the last many sessions, we have seen that the small-cap index has been inching higher by 0.5% to 1% on an everyday basis for last many trading sessions. And that's the space which is seeing the maximum amount of traction. Talking about traction, that's quite visible in metals today. That's your top performing index. You also have public sector banks which is seeing quite a bit of buying interest. To add to that, energy is also something which is leading the gains, while pharma is on the back foot today, and that's the only sector which is in the red. Talking about PSUs, they're all on fire. Pick up a BHEL which is high by 12%, and NTPC, SAIL for that matter of fact, ONGC, IRFCL, PNB, pick up any of the public sector names, whether from banking or other industries. They're all doing quite well in the trading session. And of course, autos is something that we are watching out for. The August sales data mixed but with a bit of positive bias.
Oh yes, indeed. And autos have continued to hog the limelight all through this week, what with Maruti making it to an all-time peak. But then, of course, there are other names as well which have managed to hit a record high. Sign, for instance, there's a Kotak Initiate coverage with a buy, and that stock, they say, is trading at more reasonable valuations. An upgrade coming in there. That stock is holding up over 5%, 1 million shares traded at that. BSE, the buyback offer price has now been raised to 1,080 rupees per share. The stock has gained 20% in just the last 3 trading sessions. There's an HDFC upgrade as well coming in, so that stock holding out well. Anisha just flagged off the auto pack, so not just Maruti, which has really stolen the limelight all through this week, but auto sales as well coming in. There's Escorts as well. The August data, month-on-month basis, you've seen the total sales at about 5593 units as opposed to 5570 clocked in the previous month. There's M&M as well, which on a year-on-year basis has seen a 19% uptick in its total sales. And then, of course, Bajaj Auto as well, wherein the sales have also seen a jump up at 3.41 lakh units versus a comparable of 3.19. Atul Auto, it's been a staggering 34% uptick that they have seen on a year-on-year basis on their sales number as well. So a whole host of these stocks holding out well. By the way, it's not just BHEL, but look at what's happening on MCX, 8.5% higher there. GAIL is moved 6%. Talk about the PSU pack holding out. And then, of course, there's Idea as well, up almost 10.5% as we speak. So some of these stocks are fairly flared up in trade. But let's take it across to Kunal. Naresh, find out after the listless last week of August, Kunal, are we likely to see a flare-up in the markets? We've already made it to 19,500.
Well, it looks like entire listless August has been wiped out on just one single day of price up move. Because today's move is not just about the index moving up higher, but it's the sentiment across major of the stocks which have moved up higher, the likes of BHEL, most of the names which you've highlighted, the PSU pack, GAIL, NTPC and ONGC moving up 4%, 5% higher, and that too on a very consistent basis on an intraday charts as well. So even though intraday traders saw a bit of a pop up into these stocks, there was a good participation which is still there after the opening for these stocks, and these stocks have moved up higher from that 0.5% to 1% gap up for these stocks individually. So I think that participation levels have increased for the PSU stocks. This could probably boost the sentiment further for the sector. The Nifty coming back above that 90,400 mark. That is also one of the very interesting aspects about the market today. Bank Nifty making a comeback again about that 44,500 mark, or just about at those levels. So very good session for the index as well as for the overall market today so far.
Naresh, I want to pick up a couple of these exchange stocks and talk about that. BSE, of course, wherein the incremental news is that the buyback price has been increased to over 1,000 rupees versus 800 rupees earlier. And MCX, wherein we at ET Now pointed out yesterday that there was a first mock session held, which went out without any glitches. And the second one is likely to happen today. If that does work out positively, the company would be able to perhaps adopt the new software, which has been the biggest overhang. They have been losing almost 125 crores per quarter as cost of the transition as well. well, and that will go away once this new software is developed. And on account of that, MCX is trading high by almost 8% in the hopes that the new software will be adopted. But technically speaking, on MCX as well as BSE, will you still buy?
So would still be a buyer in MCX. If you look at MCX, today's price at 1600 to 1800. The stock was at 1600 back in 2012. So that's the kind of underperformance, and that is unusual for an exchange stock, given the market conditions over the last 10 years. Then if we go back to 2020, it topped out around 1800, and then maximum high was around 2100. So the stock has done nothing for the last 2 years or the last 10 years. So it's been a lot of promise, but no delivery. Finally, if this change which is going to happen could be a trigger for the stock, wherein I would expect it to eventually cross all-time highs about 2100. So it's a buy at current levels, add on dips, and write it on for a much bigger move. Technically, in the short term, it's given a cup and handle breakout, 4 attempts made around 1800 odd levels, 1700 odd levels ideally. So it's a big breakout, looking at it as a stock which could go towards a long-term high. BSE is also interesting, just that it has moved up quite a bit in the short term. I would prefer MCX given the underperformance for the last few years.
BHEL, of course, has seen an OI build up 49%, 11.5% higher on the stock. MCX, India Cement as well. What a move. In fact, if we could just bring up the intraday graph, a flat better part of today's trading session, a mild bit of pickup, which got sold into. And then now again, the stock is picking up all the way to its day's peak. A 9% solid move coming in on India Cement. Kunal, let's walk through the chart of not just India Cement, but the entire cement sector too.
Well, in fact, the entire sector has been an underperformer. So I think Ultratech Cement has been lying in a range over the last few weeks. India Cement, this could be a strong breakout move, because I remember, I think 3 or 4 weeks back, the stock had shown a very strong up move coming back towards 250, 255 odd mark. From there, it corrected back towards 230, 225 levels, and now it's made a comeback again after an 8%, 9% up move so far for the stock price. So this could be categorized as a strong breakout move or a swing breakout move for India Cement. And then we look out for higher targets. So I think the first major resistance for the stock on the last 6-month or 8-month basis is around 320 or 300 mark for India Cement on a round-off basis. So I think we could now be looking at those kind of targets for the stock price. And this also gels in with the entire market mood and momentum that risk on is back in the market, looking at the surge in the high beta stock. So I think in that aspect, we should probably revise the targets significantly higher.
Yeah, quite a bit of move on India Cements. Actually, let's take that across to Rahul Shah as well, who's joining us to talk to us about the fundamentals. Rahul, let's begin by discussing India Cements and the cement pack itself. What explains this 9% move?
Hi, good afternoon. I think obviously 2 things about it. I think we have a neutral rating on India Cement, so I think we are not so positive in terms of the valuation perspective and then the business perspective post the numbers which they reported in this quarter. So my sense is I think you have other better bets in that perspective. But I think one thing is visible. I think where we've been seeing the price action, the stock has been quite stable even post numbers also. And I think with a huge volume action. So maybe some activity which might be going on, looks like that's why the stock is up. Rest, I don't think so any other thing which is happening in terms of fundamental perspective as what it looks like and as a cement play. But if I have to compare with the other cement players, then I think the story remains intact for the entire cement as a basket. If I look at it, I think way the thrust of government by spending on infrastructure, I think way the real estate, we are looking at the demand in the real estate sector and the way the sector has been doing well. So I think there's 2 reasons. And third, I think way we are seeing the overall demand in terms of the capex trend, which is coming back in India. So I think this all 3 factors, the demand will remain firm. And I think what we've been doing a channel checks with most of the cement manufacturers, what we gather is I think that demand is quite stable in terms of the entire, in spite of the monsoon season. So I think all these factors augurs well for the cement. So I think I would continue to remain positive in the cement as a sector as a whole.
Ashok, Leyland August sales have come in and they've come in higher by about almost 10%. Just to give you a recap of how the auto sales have panned out so far. For M&M, the automotive segment has delivered much ahead of what the street was anticipating. It's a 6% uptick coming in on a month-on-month basis. For Maruti as well, a 4% uptick on a month-on-month basis, 14% higher on a year-on-year basis. At about 1.8 lakh units. For Eicher Motors, the VECV, the CV segment has performed way better. So that is definitely higher than what the street was anticipating. But it's the two-wheeler segment which has actually been tempered. So be it Bajaj Auto, that's been definitely sub what the street was anticipating. It's a 7% month-on-month uptick, yes, but the street was expecting a higher figure. Even for the tractor sales, they've fallen short of expectations. So it's a subpar number from both M&M tractors as well as Escorts as well. And this is only compared to what the market analysts were expecting at large. But Rahul, what is your reading of auto sales, and more importantly, what the stocks are doing on the other hand?
So I think auto as a pack, I think has done well, and I think now what we believe is I think the numbers have been mixed, and I think as per our expectation, most of the numbers which have been reported are monthly numbers are as per our expectation. So 2-3 things I think what I understand is I think obviously CV and passenger vehicle, to be precise, I think what we've been doing are dealer checks, I think where we are seeing that inventory is on the rise, and I think that could be a little bit sluggish in a couple of months. I think the demand might not be remain the same what it is. That is one thing what we do. But overall, with the new product variants and all, I think should come back as the festive season comes back in next couple of months. So I feel that remains intact. Secondly, I think commercial vehicle, what we have seen CV cycle getting revived. I think both Ashok Leyland and Tata Motors also should remain firm in that perspective. So I think these two stocks looks interesting. Thirdly, I think two-wheeler space, I think Eicher and TVS. TVS, I think if you look at it, has done very well in last entire year and one of the best performing stock in the entire two-wheeler space. So that also looks interesting at this juncture. So I think this three remains the top bets in the entire auto play.
Those were the top bets from the auto pack, but let's go across to my colleague Sumit. He was right there at ground zero when Royal Enfield launched a new product. Let's go across to him to try and understand the details of this one, because this is also attractively priced at around 1.75 lakh rupees.
Launched its much-awaited Bullet 350 today in Chennai. It's priced from 1.73 lakh to 2.15 lakh. Well, this bike has made what Royal Enfield is now. It's a bike that has been running from generation and generations, and it has seen many avatars, and it's a new avatar coming off the Bullet 350. Well, the bike, well, it has been there since long time and supporting Royal Enfield. Whatever has come and gone, this bike has stayed with Royal Enfield, and today it's in new avatar. What has changed? Well, the DNA remains same, but the chassis of this bike is new. It's a J-type platform. Features are there. The braking, that has changed a bit. Also, what has changed is overall, we can say that refinement and tuning of the engine. New features have been added. It has been given a complete makeover. In terms of looks, it's not that changed. It looks like the same Bullet which was there earlier. Also, because company thinks when it's not broke, why to change it? So when the look is doing so well for the company, it's not going to change much as far as look is concerned, because it was the USP of Bullet since long time. Well, the market is changing. Hero Harley has come, Bajaj Triumph has come. New companies are coming to take the overall market share of, eat into the market share of Royal Enfield. But this is the one Royal Enfield is betting on.
Okay, that's the new bike from the Royal Enfield stable. We'll take a very quick break on that note. When we come back, we'll continue our chat with Kunal, Naresh as well as Rahul.
Welcome back. Well, no let up in the rally. That continues the momentum. The Nifty Bank high by 500 points. Nifty 50 itself high by almost 200 points. And one pocket which is actually doing quite well for itself is the entire public sector names. So whether it's the oil and gas names, whether it is power stocks, or even the banking names and the railway stocks, all of those stocks are really in focus. Rahul, the question is, do you think the PSU stocks are ripe for a reboot? And if yes, which of those verticals will you pick first?
So I think if we see that, I think after a long time, we've seen that PSU is coming back as a sector. So I think obviously we saw banking, PSU banking doing very well. And then I think they've been just a momentum has continued. Secondly, I think if we see a lot of PSU rail stocks or maybe PSU as a whole, defense as a play, everything, all of them has come into and maybe a different story building up in each of the segments. But I think obviously they've done well and looks like continue to do well going forward as a whole also. So I feel that still I think a few select pockets like maybe some companies like REC and PFCs, they have been done very well, but still after the stocks being moved up almost 50% or maybe higher in last 1 year or so, but the momentum is continued. The valuation looks quite attractive with a good dividend in play, and plus the most important, I think the business guidance what the management is guiding for the next 2 years, I think that they're poised to do it. So I think what has changed is I think the market never used to give the valuations, and I think used to be underowned by the most of the investors. So now what has happened in last couple of quarters, I think the numbers have come and most of the companies, and plus the re-rating has happened by investors' interest getting into it with the overall market as well. So my sense, I think the sector which I pointed out, I think you should look at, I think OMCs, I think obviously the stocks have declined anything between 10 to 15% in last couple of weeks. I think this becomes a good momentum play from here as well. I think the risk remains very minimal from here. So I think OMCs, I think, as I mentioned, the power financer companies like PFC, REC, power companies like NTPC, after a long time, the stock has done well. So I think all this entire theme as a whole, as a PSU, as a pack, I think all these pockets will continue to do well in spite of they've done well in last 6 months.
Okay, quite a bunch of PSUs which are holding out. Let's see what PVR as well is up to. They've recorded the highest box office month of all times, and they've actually broken the highest daily admissions and box office collections as well. While today the stock may not be holding out, and it's a little tempered at about 0.6%, but around the 1780, 1750 kind of levels, Rahul, what's the take on PVR purely because of the sensitivity to box office hits?
So as you rightly pointed out, I think a couple of hits in this month and new releases which hit it, and they've done quite well. And I think we've seen that the collection by 3-4 movies which have come up and they've done quite well. So I think this obviously with this price sensitivity, I think this stock has done well. So I would continue to hold on from the current levels. I think I would not get into the stock at this levels. The stock has already run up. So I don't think so in near term any major upside is there available in this stock. So I would rather avoid investing at this point of time in PVR.
Okay, so that's the take coming in as far as PVR is concerned. Shifting focus to what's happening in the other sectors as well, and real estate is one space that was doing quite well for itself, especially after that Mumbai real estate data that had come in talking about the record sales in the month of August despite the increase in the ticket size that we have seen. Naresh, from the real estate pack, whether Mumbai focused or otherwise, which are the stocks that you would make your top recommendations? Naresh, you'll have to unmute yourself.
One stock which has not yet broken out on the real estate pack is Brigade Enterprises, which has been testing that same 600 mark for the last almost 2 to 3 months. So that looks the most promising one on a technical breakout basis. The next one would be to look at something like DLF, which has done really well. Kolte Patil, which has done well in the near term. But another name I will be watching out for is Godrej Properties, because that has been sideways for quite some time. If that can cross 1750, that would be a big fresh breakout out here, and it becomes a Bombay play as well. So would look at Godrej Properties and Brigade Enterprises.
Rahul, what's your take then on the realty market, and whether you would go region specific and focus on the Mumbai region plays?
Sorry?
No, just wanted to understand where is your preference within the realty market, and especially the data that we've seen from Mumbai, that it's managed to clock the highest ever, property registrations in the recent times. Would you be tilted towards the MMR region specific players?
So I think if you talk about the entire sector as a whole, after last financial year, if you look at, I think the 43% sales growth in most of the entire real estate sector as well, which is a good comeback. And secondly, most of the large real estate companies, maybe MMRA or NCR, or maybe a focus towards Bangalore or maybe so most of them have guided a steady year from here, and maybe in next couple of quarters also could be a steady for them with a guidance of anything between 15 to 24% in the growth. So my sense is this sector as a whole will continue to do well and is poised to do well. So at that name, what the preference is, what we like is obviously the Godrej being in the large space, which we continue to like. With secondly, I think Lodha, which we've done quite well in recent times, but we continue to prefer that. And thirdly, I think what we believe is, I think in a Bangalore markets, I think two stocks which continue to do well is Prestige and other one is Brigade. So all these 3-4 stocks and the entire real estate sector, we continue to prefer all of them.
In the real estate pack from across the country. But Kunal, a lot of these buzzers like MTAR Tech, even the likes of Data Patterns, the smaller defense companies at that, and you also have the hotel companies, the likes of EIH Hotels doing quite well for themselves, and the momentum has been building up for the last many days. Would you still buy these names?
Not MTAR Tech specifically out of the names that you mentioned, but I think Data Patterns could be an interesting bet. The stock went into a 5 or a 6 day correction, had come back towards 2,200, 2,225. That was the low the stock had made 2 or 3 days back, and it's now made a comeback again. So when stocks rally up higher, go into a retracement or a correction, then move up higher, we call that as a staggered or a steady uptrend for the stock price, and the previous low, swing low for the stock becomes a support. So I think in this case, from the previous support of 2000 or I think 1950 for the stock price, the support has been raised up higher by almost 300 points to 2200, 2250 mark for Data Patterns. That could be an interesting bet. From the hotel space, I think Indian Hotels is something which I would stick to, because that's a chart which has come back after 2 or 3 months of consolidation. We were discussing this a couple of days back, that how the stock has shown price volume breakout, coming back from 380.85, which was the breakout point for the stock price, to 410, 420 plus mark, where today the stock is trading. So that's a much more stronger as well as a better bet from the hotel pack.
Okay, that's what the take is on hotels. But let's get in some closing trades as well on that note. Naresh, what's on your list?
So I'll be going with Power Grid. That's the only stock which has not yet broken out in the public sector enterprises. The whole PSE basket has done well. The recent highs for the stock are 250, 253, which is where it is trading right now. So this could break out over the next few sessions.
What about you, Kunal?
I'll go with MCX even after this 8% up move for the stock price. I think this could be a huge breakout for the stock on the weekly as well as on the monthly basis. So would go with MCX as a closing trade.
Okay, you know what, I also want your view on TVS Motors, but before that, let me go across to my colleague Asesha to set the context as to why we are talking about TVS Motors, because the month of September and October is something which usually has seen big up move for this counter. Let's go across to Asesha and get that context set. Asesha?
Well, yes, historical evidence suggests that strong seasonality factor plays out for TVS Motors in the months of September and October. Now, if we look at the last 12 years, TVS Motors has given an average return of about 10.1% in the month of September. Only in the last 1 out of the last 12 years, it has given negative returns. And strong September is usually followed by a strong October. So in the last 12 years, TVS Motors has given an average return of about 11.2% in the month of October, and only in 3 out of the last 12 years it has given negative returns. So this clearly shows that TVS Motors is an excellent play on the festive season, and this time festive season is 3 weeks longer than usual. So Diwali is in mid-November instead of mid-October, and hence this could also be a catalyst for the stock in the near term. Analysts say that TVS Creon, which is an electric vehicle scooter which was launched last week, could also be a near-term catalyst for the stock going forward. As far as the export demand environment is concerned, it has been sluggish for the last few quarters, but analysts do expect that perhaps some recovery is expected to come in from this quarter, that is the second quarter of FY24. So improving market share in the ICE scooter segment, robust traction in the electric two-wheeler segment, and strong pipeline in the two-wheeler electric segment are some of the positive triggers for the stock going forward. So yes, historical evidence suggests that strong seasonality factor has played out for the stock in the months of October and September. Let's see how it pans out this year.
Asesha, thanks so much for that. Naresh, you heard what my colleague pointed out in terms of the historical evidence. Would you concur with that view? Anything on the charts that you would want to talk about?
So TVS Motors as such has been in a strong trend for the last almost 1.5 year. So out here, it's actually getting into a zone where you get a little uneasy given the say move which has happened in the last 1 month, last 6 months. So the risk reward is not great here. So I would be an avoid. The other auto names still look much better.
That's a take coming in on TVS Motors as well as the rest of the auto pack. Time now to slip into a very short break, but as we do that, Rahul, thank you so much for joining us. Appreciate your time, and also listen in to what Milind Karmarkar as well as Sameer Arora had to say about their top bets.
I think we are at a cusp of growth when it comes to rising per capita income, and from 2,500 to 6,000 could happen in a span of next 7 years. So anything which benefits out of this, because that is almost 2.5 times in 6 years. And if that happens, then all these sectors, whether it's insurance, whether it's finance, whether it's retail, so these are the type of stocks which I would classify under above 5 years. 3 to 5 could be these railways and EMS players.
If you look at the fact that the banking sector is strong and doing well and hasn't done anything for at least now the calendar year and maybe even some part of last year, and it's a big part of the market, and you are getting foreign flows, and you can buy things like HDFC Bank at 3-year-old prices. It is the easiest thing for the world to do. So on Zomato, may I say that you were the first guys we told when it was 52. The thing is, when it is falling every day, to come and say that we own it or we've just bought it, rather than now when everybody is buying it.
I do expect some, flattish movement, sideways movement, maybe slightly a weakish trend in the broader markets, and in that context, staples should outperform. IT would also probably be a sector where you will see some outperformance over the next 1 to 2 quarters. But once again, that's going to be a tactical bet for me, and not something that I would buy and hold with a, as I said, 2-3 year view.
MCX continues to go from strength to strength. You're watching closing trades, and so do the markets actually, after just so much of a lull, and especially how the better part of this week has been. Finally, we've made it to that 19,500 print for the Nifty futures. It's a solid 110-point move that you're currently seeing. And yes, the spot Nifty getting closer to that 19,450 mark. It's really all the PSUs, right? So everything from a BHEL to a GAIL to the power, railways, defense space, they're the ones which continue to hold out. Andrew Holland as well joins in on the show right now. Andrew, hi afternoon. Are you also digging out within the PSU pack? Because that clearly seems to be the flavor of late.
Yeah, no, it's the whole. Let's take the banking sector. It's been a laggard now for some time. So, not surprising you get some kind of relief rally or rally in the index. But it's not compelling. It's not. It doesn't give me the confidence to kind of say that we're not going to drift down over the next few weeks. There's a lot of events ahead of us. There's a lot of kind of messy global factors which are still playing out, whether it's China, Japan, and the Fed, obviously, with their policy this coming month. So, I expect a lot more volatility. And of course, here in India, we have our own kind of inflation, stroke monsoon, stroke El Nino to face. And I think that's something that the market has been getting into grips with. But that's why we saw the market fall quite a bit last month. I think that theme will continue to play at least until it starts raining.
But you know what, we were also speaking, Andrew, with Sameer just this week, and he was talking about how HDFC Bank is perhaps the best contra bet to take, given the fact that stock is available almost at the prices that it was 3 years ago, despite the merger and everything. Would you buy that argument?
And it's cheap for a reason. I'm sorry, it's cheaper. It's a bit similar levels to what it was 3 years ago for a reason, and that's because the market's still awaiting to see how the merger pans out, and I think that will continue to be a wait and watch approach by the market in terms of in terms of before it wants to give the thumbs up to the merger. And of course, I've just been looking at some data which is showing, kind of credit growth is starting to slow. And surprisingly, everyone's giving out unsecured loans, which is, again, somewhat surprising given the strength of the economy that you have to see loan growth through kind of going unsecured loans. So not sure the RBI is going to like that too much. Let's see if they take any action on it. And I think the second thing for the banks is obviously this race to garner deposits, and that's going to squeeze NIMs in the very short term. There's a big race out there to get it, and I've heard of rates of 8.5, 8.75 for fixed deposits to try and get this deposit base up.
HDFC Bank, but we have been highlighting MCX, which was higher by almost 5 to 10% yesterday, continues the momentum today as well. What's the reason for that? Well, Somit is joining us to tell us all about it. Hi, Somit. Okay, we'll try and reconnect with Somit, but the news is that the mock session happened yesterday or even a day before yesterday as well, and the second session is expected today. If it does go all right today, perhaps the company will be able to adopt that software, and that will be the big news that will come in for MCX. But let's look at some of the other buzzers as well, and of course on the gaining side you have RailTel Corp, which is higher by almost 16%. Vodafone Idea, that's showing great amount of traction as well, 11% higher. And then you also have names like Trident Limited, which is doing all right, apart from IRB infrastructure, etc. as well. Andrew, what about the capex and the road infra makers, etc.? Do you think this is just the usual rally that we see ahead of elections in the election year, or do you think there is just genuine pickup in terms of the order bookings and order inflows and the overall infrastructure development?
Yeah, again, I think that could well be the case. I think the way we've been paying the capex cycle is not the kind of the roads, bridges, and so forth. It's been more of the capex towards smart buildings, smart manufacturing. So that plays more into the kind of ABBs and Siemens in this world. I'm not saying that the government will continue to spend, that's for sure. So some of these companies, will see huge order flows, and I think that's what pushes share prices. And of course, as the market gets excited, you'll start to see, as we have seen, prices move higher. But it's always a problem here with execution. So as long as the order flows are coming, that's fine. That will help the share prices. But execution is always fraught with mishaps and lower than expected returns. So I'd say I'd rather play it through other parts of the capex cycle.
Talking about mishaps, actually, no, I'm going to come to that question in just a bit. Let me quickly take it across to Somit, and he's picking up some info on MCX and as to why it is a buzz in trade. Somit?
Well, yes, MCX remains in focus. The stock has been gaining for the last 5th consecutive session. Today, volumes are very strong on this counter, nearly 9 times that 20-day average. Now, yesterday, the company successfully conducted its first round of mock trading. Now, no glitches were found on yesterday's mock trading of the new software. Now, this new software implementation is important for MCX, and before implementing this, they are conducting this mock trading. Now, today is the second round, and the timings for the second round of mock trading is 2 to 5 p.m. And in the first hour of this mock trading, what we have understood is that few glitches were found by the brokers as they were placing the orders, but the orders were not getting delivered to the exchanges. So these brokers have informed MCX about those glitches, and MCX is working on that front. But in the first hour of the mock trading, this is one of the glitch that was found. Still 2 hours are left, and we'll get you more updates on that front. But now this software implementation is very important for MCX, given the fact that every time this gets delayed, it costs a company more than 125 crore per quarter. So this has been a continuous overhang on the share prices, and if there are more glitches, then there is a possibility that software implementation might get delayed. But yesterday's mock trading, there were no glitches found, and today only in the first 1 hour there were few glitches reported by some brokers. So we'll have to still wait and watch how the next 2 hours of this mock trading goes around for MCX. So keep an eye out for MCX in trade.
we are playing it by the year. So, yesterday, at least, there were no glitches. But in the first hour, there have been some initial glitches that have been found by some dealers. We'll, of course, have to wait by and see what is the nature of these glitches and the gravity of the situation. Whether this is something that the company can easily mitigate or something which will further delay the implementation of the new software, and basis that the stock will really move one way or the other, because this is pretty much a binary event of sorts for MCX, because this particular software has been costing a lot to the company, given the extensions and the more extensions that were coming in for the 63 Moons software versus the TCS software that they're looking at implementing. That was the deep dive into what is happening at MCX and why that software is very important. But the other thing, Andrew, which we have been seeing of late, is the fact there have been a number of these block deals, large deals, promoter stake sale, P exits, etc. In fact, my colleague had culled out the data, and in the month of August, there were block deals to the tune of 65,000 crore rupees, almost the highest that we have seen in the last many months. What does it tell you? Is it a bit of a hurry for others to book profits, or they're just banking in on the kind of up moves that we are seeing across all sectors in stock?
Yeah, I mean, obviously, if you're a private equity player, and depends on the length of your fund in terms of the how many years you have to run it. Given the kind of big up moves, maybe in the kind of mid and small caps and some of the kind of just below large caps, it's tempting to take money off the table, right? And then you have fresh money for other funds or for other companies that you want to invest in. So yeah, and I'm not particularly worried about it in terms of the block deals. I mean, for some it's increased liquidity. For some it will put them into new indices or in MSCI. So there's no harm in that. So I think it's fine. It's as long as there's big buyers around, which there are. They will continue to take advantage of the markets, and we should be happy that we can participate in the ones that we want to, and get the size that you want as well.
Flag out Mankind Pharma, Aisha, because that one has seen a sudden dip. Of course, Pharma was on the back foot, but pull up the intraday chart of Mankind Pharma, sudden nosedive happening, 6%. Vijaya Diagnostics is the other one, and the pharma space as a whole is seeing quite a bit of weakness today.
Yeah, it is. And, this comes in on the back of just about a little bit of rebound, which was taking place in the pharma pack. I mean, I'm not drawing away from the mover that Cipla has been all through last year, or a few odd sporadic moves in a Sun Pharma. But yes, just about when pharma did sort of gain ground, you're today at least seeing some amount of a cool-off coming in the pharma pack. But Kunal, does it seem like this is a trend in the making or something, or just a one-off that today you're seeing a cooling off?
No, I think there's a trend in the making for the pharma stocks. In fact, a few weeks back I was mentioning that Glenmark Pharma, Oro Pharma, these stocks have breached their overbought nature in terms of indicators. So there's bound to be a cool off into these stocks, and it may not just be a temporary cool off, because Aurobindo Pharma, for example, has rallied more than 80%. Zydus Life, Glenmark Pharma, I think the year-to-date price appreciation for these stocks is around 50%, 45% approximately for these stocks at their peak, which means that these stocks have gone through a significant up move after remaining into a consolidation. Now, these stocks are not habitual in terms of the beta nature. Now, I'll give you an example. For example, the pharma stocks have a beta of 0.5, 0.6. Now, if suddenly in a span of 3 or 6 months, the beta jumps up to 1.2, 1.5, that's called as an aberration for these stocks, and they have to cool back again to come back into a neutral territory, at least sub 1. That's a process of at least 1 to 3 months or 5 months, 6 months consolidation for these stocks. So I believe that consolidation move has actually started for these pharma stocks. And given the way the markets have moved today, the risk on is back. That's also one of the reasons why I would believe pharma should underperform.
Risk on is back, and that means that pharma might underperform at least in the near term. But that risk on is having a good impact on the metal stock because they are shining away in the trading session. Naresh, what's the top bet from this pack apart from Hindustan Copper that you've been quite positive on?
So overall, in the metals pack, one is NMDC, which continues to look very promising. Second is Tata Steel, which has broken out. That looks promising as well. So I would go with NMDC, which has given a multi-year breakout, and Tata Steel.
Okay, that's the take coming in on some of these buzzing movers. Just taking stock of what's actually been holding out, and it's pretty much more of the same, which is gaining ground, unlike, of course, pharma or few of the pharma names, which Anisha just highlighted, which are cooling off. India Cements, by the way, is now sitting at a double-digit gain, 10.5% higher on India Cem. There's also BHEL, which is now scaling up 12.5%. Idea, which is up 10.5%. MCX, even though the round 2 of the mock trading hasn't been as successful, like our colleague Somit just highlighted. So it may have eased off a little bit from the peak of the day, but still pretty much holding on to that 8% gain. And SAIL is the other big buzzer, a solid 7% off a move, which we are currently seeing on SAIL. In fact, it's not just SAIL, but Tata Steel, JSW, Hindalco, the entire pack is holding up very, very smartly in trade. Andrew, what's the take on metals?
I think metals is, I mean, there's two ways to think about metals at the moment. It depends on your view of whether you think China will do a bigger stimulus than they've been doing. And my view is that they still have to do more. You know, I think they've been taking a pea shooter to their problems rather than a bazooka. So I still expect there's going to have to be more action taken. Yes, some of the things that they've implemented will help at the margin, probably increase GDP growth, or have a a positive momentum, but it's not enough. So you could say that if they think it's enough, then I could tell you now that the demand problems in China will continue, and therefore you'll see commodity prices come off. So if you think there's another big stimulus coming, then obviously metal prices will continue to do well. I'm of the view that there'll be another stimulus by China, and therefore commodity prices will tend to move higher from here. The problem is that in that is obviously that's not great for India as a in terms of inflation. So that's a negative for us. So a positive for China, a positive for metals, but not for India overall.
Since we're talking about the metals pack, let's also listen in to what Shyam Metallics, the management, had to tell us regarding how demand is shaping up for the metals pack.
The raw metal prices have gone up. So it is true, like if you see there is a correction in the iron ore prices and coke prices, which is already there. And number two, India being a pre-election year, the demand in India, in our country, is very steady. So since the monsoon is also getting over and there is all the demands are picking up, the regularization on the choking logistics and all things are getting regularized. Export of the China is going down. Internationally, there is a huge, pressure on the Chinese steel. And this is one of the reasons. Also, now China is planning to, invest more on their internal development, but we might see in the near future these things going to come up. In Europe, the interest rates have gone up internationally, and we further see some little bit hike. So what I see today, the prices, is almost at the peak. A lot of expansion projects are coming up in the company, a lot of downstream, and we are focusing more on the value-added, product.
Okay, so that was about Shyam Metallics. That stock is doing pretty much okay versus the rest of the metals pack, which is actually quite excited. But on the back foot today, we of course have Cipla, which is down almost 1%, HDFC Life and Dr. Reddy's. These are the three top losers at the index level. In fact, talking about Cipla, my colleague Cheryl had broken the story that Torrent Pharma is actually looking at paring down some of the equity in the company to fund the acquisition of Cipla. However, there was a fresh clarification that came by from Torrent Pharma saying that there's nothing incremental to report as of now. They haven't, of course, denied the report, but they said there's no comment to make on an incremental basis. Let's listen in and go across to my colleague Cheryl to understand what those exclusive details are.
Yes, it's an ET Now exclusive. Sources have told ET Now that Torrent Pharma, which is actually looking to bid for the Hamid family stake in Cipla, is actually moving ahead with various options. One of the options that the sources have told us is the fact that the promoters of Torrent Pharma may look to actually dilute partial stake in the company. Approximately 20% is a stake that they may look to actually dilute in the company. Remember, the promoters of Torrent Pharma already hold 71.25% stake in the company. So this is one of the options that they are looking at. Remember, the Hamid family stake sale is supposed to be an all-cash deal. Apart from looking at the option of actually divesting stake in Torrent Pharma, what the promoters are also doing is that they have lined up debt from foreign lenders as well. And in case the company is going ahead with that bid for the Cipla stake, they will be doing that in a consortium with the Ps. Remember, both Cipla as well as Torrent Pharma are cash generating businesses, and also if this deal goes through and it's a combined entity, will become the second largest pharma company in India by market capitalization. Also, the combined entity will likely have the revenue of around 32,000 crore rupees, while an EBITDA of approximately 8,000 crore rupees. No doubt, when we actually broke the story, we asked the Torrent Pharma, we actually emailed Torrent Pharma for their comments. We did not get their response. However, they've actually responded to the exchanges, and they've told the exchanges that at this point in time, they don't have material information that requires disclosure. Also, they've said that they will not be commenting on speculative reports. So that's the commentary coming in from Torrent Pharma. But what we are learning from sources is the fact that various combinations of financing that the company may look at in order to pick up that stake in Cipla.
Okay, Cheryl, thanks very much for that story. That was the big ET Now news break yesterday, and of course, many other publications have also picked up on that. But Andrew, just wanted to understand from your perspective, what does Cipla bring on the table for Torrent Pharma, and do you think it's going to be a good deal in that sense?
I can't really comment on that, but it's also, without knowing any details, it's impossible to say, right? So let's see what, if anything, comes in terms of any acquisition or merger or stake buying. At the moment, it'd be just pure speculation.
To comment right now, but the deal is something which is definitely brewing. At least that is what we are picking up from our sources. What else is happening in the market? Well, not much. It seems like, yes, the Friday fever is there for the market because the index level is definitely picking up. But in terms of the individual sectors in stock, it continues to be metals that's gaining ground. Auto is also picking up a bit, given the fact that we have seen the auto sales data come by. And then, of course, there are the broader market elements which are coming at play as well. But today we also spoke with the management of ITD Cementation on the big order win that they had bagged. That stock was held by almost 10 to 12%. Let's listen in to what the management had to say about the order outlook going forward as well, given the fact it's an election year.
The ordering trends are pretty good. In fact, our order inflow in this year has exceeded 5,000 crores. You know, we are just about 5 months into this financial year, and our order booking this year is already 5,000 plus crores. And our order book today is about 22,000 crores. And we see this ordering intensity continuing at least for this year or till, you know, the election code of conduct kicks in. After that, there may be a little bit of a lull till the Lok Sabha elections take place. But otherwise, the intensity is pretty strong this year. In Q1 of this year, we did about 1,800 crores. So even, you know, extrapolating the Q1 performance for the whole year, I think we should be in the range of 7,500 crores. God willing, and the monsoon not really impacting our execution in this year, I think we should see a pickup in the scale of our operations in Q3 and Q4. And I think we should pretty comfortably be somewhere between 7,200 and 7,500, or maybe a little more than that as well.
Okay, that's the word coming in from the ITD Cementation Management. In the meantime, let's just analyze what the week gone by has been like. Well, it's been an acutely quiet one at an index level. It is the broader markets which were lively pretty much on a daily basis, and the mid-cap index has managed to clock a fresh high just this week as well. But Naresh, if you were to just map the weakest links from the week gone by or from the series, would it be Reliance coupled with private banking names?
So I would say it would be Reliance and HDFC Bank itself, 25% of the index, which is not going anywhere. Whereas everything else has gone up. You have mid-cap index at a new all-time high, small cap at a new all-time high, Nifty 500, Nifty total market at an all-time high. It's only because of Reliance and HDFC Bank, we've not seen a bigger move on the Nifty. So these two names are, as of now, the weakest link.
So that's a take coming in as far as some of those pockets are concerned in the market. But what are the BTST ideas that you should carry forward for the weekend? Kunal, you go first.
NMDC is the first stock which I will suggest as a buy, trading at 130 at the high point of the day. Strong breakout. Targets of 140, stop loss at 125. And PNB, I sense that most of the PSU banking stocks could be getting up for a second round of a breakout after that 2022 up move. Targets of 73 on PNB, stop loss at 61.
Right. Naresh, what about your BTST trades?
So first would be a buy on Power Grid, trying to make a breakout move. Stop loss at 248, target of 260. Second is a buy on ONGC, big price volume breakout today. Stop loss at 178, target price of 190.
Okay, that's the take coming in on some of the BTST trades going right now. Andrew, before we let you go, still any undervalued pockets in the market that you identify? Some ideas that one could look at?
It's hard to find at the moment, isn't it? Everything's kind of moving up. If it's not a theme, then it's a block trade. If it's not a block trade, then it's some of factors like, say, China pushing up metal stocks today. So I think I don't mind when the market kind of drifts down, which we've been seeing over the last few weeks, last month actually. So more we can see that, I think we'll get a little bit more value. But at the moment, I'm not finding anything which is so compelling to talk about right now.
Compelling to talk about at the moment. But Naresh, a quick word on Reliance Industries and what does the chart check suggest? So maybe Kunal, if you want to take a go as far as Reliance Industries is concerned.
Well, nothing much on the charts. The stock is still at 2,400, 2,500 range. In fact, Jio is a much better chart to trade, even though the history is a lot more limited. But I think at least on the short-term basis, there is some momentum which is there into this name, trading at 240 plus levels. Reliance, I would probably believe that it's now become a good candidate. So Reliance, HDFC Bank, ICICI, I think as a cluster have become good stocks to try and go for a strangle or a straddle short strategy. It's a strategy which indicates that the stocks would remain into a range. And one can try and take profit the more the stocks consolidate in a tight range.
That must be a first, right, for you to recommend a stock which has just pretty much no trading history, but the most exciting to trade also.
Exciting to trade.
Yeah, what a mover this one has been, hasn't it? But Andrew, good to have you on the show. Naresh, we'll let you go on that note as well. And let's begin winding up for the week. And of course, the week has been a little bit soured, but today makes up for more than the quietness that we've had in the last fortnight or so at least. So closing in with a 1% gain. 19,400 plus levels on the Nifty, made it to 19,500 to print for the futures. It continues to be the entire PSU pack. Telecom, power, metals, cement and technology have made a decent comeback. In fact, I think for the week as well, Nifty IT has been one amongst the top movers, as has been the case for the series gone by too. For the day, it's been BHEL. In fact, for the week as well, I think it's going to be one of the best performing stocks in the week gone by too. Another 12% of a bump up is what BHEL has seen in trade right now. There's Idea, India Cements, MCX, SAIL. These have all been some standout performers. On the flip side though, DRL, Cipla, Sun Pharma has definitely taken a step back. And once again, it's been very flat for L&T, for HDFC Bank. Even Reliance just had a meager offer move. I think there was some news flow though on Reliance Retail. We'll just address that shortly. But to the laggards, Zydus Life, Manappuram, Abbott India, ABB and Torrent Pharma for a second consecutive day has been a laggard, has lost another 3.5%. But that's it then on this edition of Closing Trades. We'll wind it up right here.